Good morning, my friends, and welcome to the Breakfast Club. My name's Darren, and we are here on the 9th of April, working the markets. So welcome, welcome, welcome. So far, I haven't heard whether or not Michael's going to be doing his thing this morning. And if he is, then I highly recommend you all move over to watch the master at work and see what he has to say. But until then, looks like I'm the only one in here right now. That's okay. People will pop in, I'm sure. How are you all doing? How are you doing out there, people? I hope you're living life in a kind way and you're meeting up with some people. You're sharing some fellowship. You're being kind to each other out there. I got my Hawaii shirt on today. I don't know if you can see my Hawaii shirt. It's nice little turtles. Check it out. Really cool design, eh? I like that. It's really kind of cool design. My wife saw it at a store and said, like, I got to get that for you. Like, you're not paying $100 for that damn shirt. She said, no. I used to have an airbrushing business. I used to do airbrushing on t-shirts and stuff. So I remember buying shirts, like Fruit of the Loom shirts, for $5 if you buy them in bulk. So I was thinking, I'm not paying out $40, $30 for a t-shirt. That's insanity. But she paid $30 or something like that. American, I might add. For us Canadians, that's like $100. Good morning, Christian. Good morning. Good morning. I hope you're well. Hans, first through the door this morning, Hans. Good for you. Where are we at this morning? All right, let's make this go. Let's make this work. All right. So I'm kind of looking for this, for price to run up to this line here. In NASDAQ, which is probably the mean threshold or consequent encroachment of this BTC that we had, which is now a inversion on the daily. I'm looking for it to come back up into here before rolling over. And then I'm looking for a reversal. So 10 o'clock, I'm looking for price to run up, clean these highs out. That happens just before 10. Then I'm expecting a sharp drop. How's that? I'd like to see something like that. But who knows? So we're going to wait for a rejection, reversal. That's kind of like what I'm looking for NQ. See how this has already hit that consequent encroachment of the BTC or inversion fair value gap here in ES. And we're coming up to that same kind of level right there. So we're probably looking for a few more spikes up. So I'm looking for a nice little run up here, create this little reversal pattern to happen around 10 o'clock or so. Then around 10:10, catch a silver bullet for a short. I'm not looking for new highs yet. The seasonal tendency just doesn't give us that. Usually into the mid part of April, it starts to do a significant drop. So I'd like to see a drop down in April and then a pump up, take out the highs in May. then continue on into July and August. So right now we're between the inversion and the fair value gap below us here on the Dow. If you're trading Dow, you're like, you couldn't be any more centralized between these two fair value gaps right now. So I've got nothing for you. This is consolidating, so I've got nothing. No idea what's going on with that one yet. This is finally giving up the ghost. We've been waiting for it to do this for a while now, so this gives us lift in the foreign currencies. So we're looking for this order block here. Look for the bodies open and the mean threshold of the March 20th candle in British pound. So look for further upside in that. Wow, this was a nice reversal here last Friday. Look at that. Drop right into the mean threshold. And if you miss this, you know, the one thing to kind of keep in mind is if you miss the reversal pattern, don't get too upset with it, because you can just look for the breaker. Wherever the breaker is, you look for that and you'll find there's an entry in here. So look right here at this breaker. I stop close candle before running these lows out. And you trace that all the way across. And when price breaks it with a body and trades back to it, you take it for a long. There's the body, breaks above it, trades back to it, right there for a long. And then you'd be in on all of that for quite a few hours. So look for the reversal, and if you don't get the reversal, go for the breaker. First thing you should kind of keep in mind. Okay. Tommy, good morning. Good morning. Welcome, welcome. I'm doing great. I'm sporting a fancy tan here. Oh, I haven't even shown you guys my fancy tan. That's a very expensive burn right there, let me tell you. The boss has been nice today. Hello, Paul. Okay. Let's move on to the euro. So anyway, you're looking for a, so you found the reversal. Some people are saying, well, that's great, Darren. That's fine after the fact. Give me something now. What can I give you now? Keep your eye on this candle here. If we do get a run back to if you get a run back into this order block here, close of this, old high, mean threshold, all these three levels. You've already dipped into it once already, so this could be potentially the continuation on the upside. So I'm keep your eye on this area here for a retracement. You don't want to lose you don't want to lose the mean threshold of that candle. Well, this is good. Euro's finally giving us what we're looking for on Monday. You're looking for further higher prices, getting up into this fair value gap up here. Look for the mean threshold to give way. If that gives way, continue to push higher into the, as the American dollar continues to drop, look for higher prices on on euro. Again, your opportunity to get in. Here's your swing right here below a low. There's your swing. As soon as the body breaks above it, you trade into it. Or if you miss it, look for the breaker, last stop close candle before the run below. And as we trade above it, you see how we're drifting up, and then we come all the way back down into the breaker. And then off you go. Okay, so those are your trading euro. Look for these swing points, and then if you miss them, don't sweat it. Look, wait for the breaker, and wait for this big impulse. Like this is a good sign when you see an impulse. Like now for you guys, you might look at this and go, that's 4, 8, 16, 24, or 20, 24. That's like 2 days later. It's going to take me to come all the way back here. How much patience do you have, right? What's your setup? If that's your setup, then you're going to have to wait. You're just going to have to wait. Look for that in this situation. We have a body trades above this swing point. We're on a 1 hour now, so this was the 4 hour. Because everything is fractal, everything happens on a fractal basis. Doesn't matter what time frame you're looking at, you get the same thing. So we have a reversal happening here. Body trades above it. The moment it trades back to it, you have 1, 2, 3 points of entry. Stop loss goes down here. No more than 1 or 2% of your account, depending on what you guys want to trade. And as soon as it trades back into there, there's your level. There's 1 entry right there. There's 2 entries right there. And you don't get the 3rd entry there, but you have at least 2 entries for a run up. If you miss it, look for the breaker. That would be right here, this big beefy one right here. Look for a return back into that. Oh, you just shy of it right there. You don't even get an opportunity. It's these old highs here you have to look for. That's another thing you have to kind of look at. I like the breaker, but you can just reach these old highs here. I know it seems like I'm form fitting it now, but old highs, you have to keep those equal highs. You have to keep those into mind as well. You don't even get a cam model entry. Yeah, I guess you do it. Cam model 1. Anyway, upside prices. Canadian dollar, can you get yourself out of the mud? Can you get yourself out of the oily sludge? Canadian dollar. It's just, it just looks like a cheese grater on a daily. How terrible is that? Maybe open it up a bit more, get thicker cheese through this. This is nuts. So we have a return to filling this fair value gap right here, return to an old fair value gap below you, which is inversion now, and either push for higher prices. We're hoping the American dollar will continue to drop. That will force, maybe, Canadian dollar doesn't always tend to respond the same way the American dollar does, in a positive way. So as the American dollar goes down, we're expecting further deeper dig into this order block here. So mean threshold, consequent encroachment of this inversion. And hopefully if we can lose that, then we're looking for rejection block, then take that wick and divide the wick into the typical quarters. Lovely. New Zealand dollars acting the way we wanted it to, finally kicking out of that nice little run up this morning. We have no significant swing here other than right here. So draw that out on your charts as an inversion, because now it's inversion from that point on. If you come back to this, find some support. If we hold up on the mean threshold for this right where we're at right now, and it pulls back, look for a dig down into here, and then a final push through for higher prices. Right now we're keeping an eye on this candle. If you lose the mean threshold on a close today, that's a positive sign that we may just get a small retracement into a fair value gap, creating another one here, a BTC, and then pushing for higher prices. Aussie D, look at that. It's really responding well. We're right through that fair value gap we're looking for on Monday, and we're digging right into this reclaimed fair value gap here. We're reclaiming it multiple times here. Now we have got to work the upper portion. This lower half has been worked really well, so expect prices to run these old highs out and get back into a deeper solid close on Australian dollars. I do like upside on the Australian dollar. Everything looks good for upside this week for these currencies. Japanese yen. Look at that. Once again, that ceiling, retail's loving that. They're thinking that's like the ceiling. Someone's going to blast right through that. They're going to put a big hole in that thing before running down. So don't count your drywall as dry yet. They're going to punch a hole through that ceiling. And again, this is like weeks. The last one was like way back here somewhere. Yeah, like look at that. That was back in October 2022. It's just not letting go. It's looking good, but they're going to punch a hole through that. They're not going to leave all that sitting up. There's a ton of liquidity sitting in there. If we lose this mean threshold on the daily basis, on a close, look for the rejection blocks again and another attempt to dig down into these old highs here. Oil, how's oil doing then? Oil is inside this. Oh, okay. This could be a little down run on oil. Oh no, we closed above. Found support here. Yeah, I'm expecting a little bit more of a run up. Mind you, we've already run out the arrays that I'm looking for here on the daily. Don't have a solid answer for oil, sorry. I'm not going to guess. I'm going to give you guys the most solid answer I can. Gold, still got upside. There's no real indication that there's a price leg that's finished yet, so I'm still expecting more upside prices. Yesterday we got some traction off of that order block here in oil, or sorry, in gold. See how we have this order block propulsion candle come back, hit it nicely, perfectly, and then we're off to the races again, making new higher prices today. In gold, silver, still kicking up higher. I love it. Still pushing up. It created a order block here, validated it yesterday or 2 days ago, or I guess on Monday or Friday. Came back into it yesterday, dug really deep into that mean threshold, snapped up really nicely, and then continue on the upside. So still more upside on silver as well. And copper, still upside on copper, and we're coming into the order block. So see how we react here on palladium. We've been calling these guys pretty good. We're expecting a return back to these old highs. CAM model entries, all great. Now we've got a nice little displacement candle. You're back inside this range again here between this candle and that candle. We've run these highs out, so I'm expecting this to provide a level of support, these old equal highs to provide a level of support. So if we do get a kick off of this breaker right here, and we come back from breaker to breaker, you're looking for a return back into these old highs. I'd like to see that stay open and then continue pushing higher through this for higher prices, running back up into these down close candles. So that's palladium. Thanks. You guys aren't into that stuff. Bitcoin. God, I had fun with Bitcoin last night. Bitcoin was it like, what can I say? I'm gonna say I had fun with this chart because I hate to promote Bitcoin. I'm not a big fan of Bitcoin because I don't understand it that well. But I do enjoy trading it. It is fun to trade. It gives you setups all the time. All the time. There's reversals in there. There's CAM model entries in there, and they happen very frequently. I trade them before I go to bed on Sundays. This thing goes 24/7, so there's plenty of opportunities to practice inside Bitcoin. And I suggest you practice. Demo, practice till you get your setup. And this is a great one to practice on the weekends when all the other markets are closed. It's a great one if you're kind of dedicated to practicing 24 hours a day, or as much as your relationship can handle, I suppose. Commodities, I got 5 more minutes. So commodities, soybeans, where the heck? That's got nothing for you. That's consolidating. I'd expect it to start running down a little lower now. Get back into this fair value gap below you here. This is consolidating. Got nothing. It's compressing like crazy, so it's got to explode here somewhere. For corn, sugar, I was expecting more upside prices, but it looks like we're into this consolidation again. Look for this down close candle to get re-engaged one more time. And coffee still pushing higher. This is nice little clean steps down, return to, clean step down, return to. So I'm expecting this to continue stepping down. Live cattle, downward prices on live cattle, consolidation. Got nothing on Coca-Cola. I know it's not Coca-Cola. We finally broke through the gap on this side, so we didn't just come back to fill it and go higher. We've actually broken through it to the downside. So look for this candle here to provide a level of support. If we come back to that, look for further downside prices on lumber, on the lumber, and lean hog still going higher. I was just working on building a bunch more new charts, but that's it, my ladies and gentlemen, my friends. We're waiting for the big grand opening to begin of the day. And how is everybody this morning? Good morning. Good morning. How are you doing, Darren? You're the boss. It's been nice today. Good morning, Darren. Fernando. My friend Fernando. Good morning. Victor. Buenos dias, my friend. Buenos dias. Good morning, chatters, says Derek. They are sucking us into a digital currencies. Our kill zones also valid on Bitcoin and Ethereum. Yep. They are. Sound is very good. Thank you. Yeah, we finally worked through that. I went back through the recording yesterday. I thought, oh, you guys had to listen to that robotic tinny type sound. It was terrible. And it was like an hour and 4 minutes yesterday. I felt bad for you guys. Sorry about that. But hopefully we've got it sorted now, and you guys can enjoy a little better sound quality today. Now, where are we going today? Anybody else got something delicious to talk about? We're waiting for the look at this. Oh, look at this right here. Reversal. Body breaks above it. You're expecting a return back into this. I like this little gap down here. So if you can get a return into that, look for a higher prices. Get back into this range. Use your FIB tool to scale out on that, or whatever method you choose to use. Remember, we're always trading in demo dollars. Nothing you see me doing here is on a live account, but it is live. I will tell you that. And it is paid data. This is live data. It is not hindsight. It is not after the fact stuff, which is hindsight. It's live data. I actually pay for live data on my demo and my live account. You guys don't get to see. But if you see something traded on here, You guys can draw your own conclusions. This is what we want, the big slam down. Look at this here. Just short of my little wick there, my line. Oh, we might have one more little pump up to my line. Let's see if my line holds. We're looking for 18,412. 18,412. Right in here somewhere. Can I show this line on all levels? Why isn't it turning up on here? Keep your eyes on the prize, my friends. External liquidity to internal liquidity. Yes, indeed. Yeah, we never got a chance to get in on that Bitcoin thing, by the way. She left town. So if you miss it, what looks really good? If you get a return to this, which doesn't look like you're getting that either, which is exciting because I look at this and I go, I'm not upset that I missed that. That's okay. If it doesn't come back there, it's deep into this range anyway. So that's your breaker, but we're seeing this big tear away from that's great. Because when the retracement comes back in to fill this stuff, you just look for the opportunity to get back in. So watch this right here. See how we can get an opportunity to get in there. So put your stop or your, and this is what you draw out on any occasion, by the way. La la, lo la la, la 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 la. So look at that. We're digging into that. There you go. Slammo. I'm going to try taking a short right there, right off that thing. So if I'm wrong, I will take a stop loss. We'll go right here. So we'll use the fail safe here. We'll see where that closes in the next few minutes. Now I slam this right up against here, put myself in a little bit of profit, turn it into a zero stress trade. Turn it into a zero stress trade, my friends. Looky, looky. I'll make a little bit of money. Locking in some profits. Look for a return into this. If it rips back against me, I don't care. I don't care. I'm just looking for all these inversions that this could bounce off of now. So what you can do, sorry we're over on Bitcoin, but you'll get the idea what if. Now you can kind of, if you want to scale this out, I've got 5 handles on this. So we're going to go with a retracement tool. Oh, look at that. So you can do this. You can go, no, I don't want to buy one. want to do, this is, it's going to rip through. I have to start tracing my stop loss. So there's two different methods you're going to use. So we're going to do this one here. So 60, 70. If it touches that one there, see, I'm out. So I chase it down with the, that worked out good. You chase it down using the FIB tool. So usually I was going to do the one method where you kind of click it, but it was running so damn fast I couldn't. So there you go. There's 3 minutes, and I don't know how much was that? What was that worth? I have no idea what that was worth. $1,600. Not that we care about the money, but anyway, it was a nice little 3-minute run, and you kind of track it down and use your FIB tool. And as soon as you get to 50%, move your stop loss to break even. Hit 62%, move it to 50. Then it goes to 70, move it to 62. Hit 75, 70. Hits 79, move to 75, and then see how it gets closer and closer, and then all of a sudden, poof, it pops you out. You caught a nice run through that entire range down. I tell you, Bitcoin's a fun one to play with. Or you can come here and play with this monstrosity known as, oh, look at that, we missed an opportunity. See that right there? Body trades below it, pops into it, trades short right there. So hopefully you guys saw how that trade kind of panned out. So look, good liquidity. Blessed my dear souls. May God bless my friends. Amen. Christ loves good people. He loves you so much that on the cross he cried a lot. It was, oh, I believe for year. Okay. Thank you, Jose. Just closed up 50% of the opening range. Good morning, Dee. Morning, Lambo. How's it going? So watch this here. I want to see that snap off of that now. We'll see where this sits. Allow the mean threshold to happen. You see, we've already taken these lows out here, so the concern is that I want to see a reaction off that. I don't like that reaction. Use those two. They'll probably end up tearing off on me now. Usually you have to see that, just tap it and then start really ripping back down. I don't like to see that waffling like that. And sometimes you just gotta look at, when you stare at candles long enough, and they're not acting the way you want them to act, then you start going, wait a second, this doesn't look good. Just the way it's acting right now, and now all of a sudden we've traded above that high, so I would have been desperately hoping it would come back to my candle here to get me out now. And that's why I closed it out, because it just didn't feel right to me. And you got to go with your feelings sometimes. When you see it enough, these candles enough times, you go, I'm not quite convinced that's not acting the way it should act. A nice reaction off of that would have been a pop and then a run, and it wasn't doing that, so I bailed. I think it doesn't matter about the money. And that I can't teach you. That's something you have to stare at candles for thousands of hours. And I kid you not, I've looked at them for thousands of hours. And you want them, you'll unconsciously, even Dave Barry the other day was telling me about this. He says, I was looking at these reversals. We practice on Bitcoin together at nighttime. Before I go to bed, I'm always kind of jumping on there, and Dave's usually up. And we do some trading on Bitcoin. And it seems, when you look at this chart, see how clean this stuff is? The setups are so nice. You can see how that run back down there on the way down to 60, and I kept trailing the stop loss down behind it. When it runs that fast, you don't have to worry about dropping in those. I'll do a buyback one, buyback another one, buyback another one. You just keep doing those buybacks all the time on the way down. You just, if it runs that fast, just grab your stop loss and trail it behind. You'll have a full load of whatever you've got on there. So that was 5 handles. So you can take 4, 3, 2, 1, and then finally close it out down here. We ended up just kind of pulling the whole 5 lot all the way down here. So you maximize your profits. Then you get in that kickoff. So when you look at this, we took that out at 75%. That's a pretty good run when you consider the retracement we've had back in here already, right? Anyway, this is cleaner. So Dave was so used to looking at this stuff, and he was saying, this is so much easier. Then when I come to NASDAQ, he says, I saw the setup in NASDAQ, but I didn't have the confidence to take it. And I thought, that's because you're developing an eye for what you want to see, some clean price action. And this is crap. This is like a terrible place to put your trades in right now. You got to be quick, and you really got to be nimble. Otherwise, you're just going to get your ass handed to you. And if you're greedy, if you're used to big, long runs, and you don't see that PDRA is, I've got to get that PDRA right there. And if I don't, if I just tap the bottom of it, I'm happy with 10 handles at a time. Guys, last night we're practicing with just 10 handles. Or Derek, yesterday, he did a great show in the afternoon, and he was talking about just take 10 handles out. And that's the super sniper, right? Just, I want my 10 handles, I'll move to the sidelines. Oh, there's another opportunity. I'm inside this range here, internal range liquidity. I'm going to snipe 10 handles out of that. And it just keeps taking it out. And you do that, 5, 6 times. There's 60 handles that somebody else tries to work all day to get. You can snap it out of there with these 1 to 2 minute candles. And that's how you make your living in these kind of crappy environments. But you got to be nimble, and you got to know what you're looking for. BR to the upside. We do have a reversal here for sure. Look at this one here. Body broke above it right there. You trade back into it right here. You go long, aiming for your first exit right here. Second exit right there. If you don't get your second exit, it rolls over. Always take your, I don't know how many times I tell people this, but you've got to take your rejection block. The difference between here and here, it's not very big, but it is huge in terms of the risk of failure. So right there, you want to go long. And if it fails, we come all the way down into here. That's the midpoint one. You want to see that react off there and start going back up now. Stop loss. I'm going to move this into a little bit of profit. There's $1,000 right there. So you quickly make a zero stress trade out of it. You want to see that start getting some legs here. I don't want to see that kicking back into this thing. Just start going. Thank you. Where's my carrot? I need to put a carrot out here. Give that thing some motivation. Come back and tap that. I don't want to see it drive all the way through there though. Ah. Stop mucking about. Come on in. Up you go. Do you not smell carrot? Do you not smell the deliciousness of carrots, my friend? Let's go. Come, come. Up here. Even Michael says this market is extremely choppy. Well, that's good. If our mentor is telling us that it's choppy, then choppy is choppy. I agree. I thoroughly agree with our mentor. It is choppy, choppy. I'm taking the 600. I'll wait. I don't like all that crap going on. See, it would have just tapped me out right there. See, if you look at it, you go, I don't like the looks of that. It's just not looking good. Would have come back and ripped right through me there and denied us $600. I took a long, also retraced to 15-minute fair value gap. If you can learn under these conditions, it would be much easier once stable returns. Holy, you are absolutely right. Carbor, you're absolutely right. If you can read these charts in this kind of consolidate, when you start getting smooth salad days, as Michael calls them, man, imagine what we're going to kill it when the market's smoothing out and you start getting NASDAQ looking like senior Bitcoin here. Like, wow, look at that next price leg down. Beautiful. And I don't punish myself for this. I was just catching this run down. So the fact that it retraced and then tore through and would have given me like twice as much profits, I don't care. That was a quick 3-minute, $1,600. I don't know about you guys, but how many of you out there are making $1,600 in 3 minutes? But those are great little opportunities. That you move to the sidelines there. That's, for some people, that's like 3 months, 5 months worth of wages. We got some people in here that $120 a day, what they earn. There's just like a month's worth of wages right there, all in 3 minutes. Anyway, we're getting close to our turn our carrot sideways. That tells you that I'm not committed either way. What say you folks? We need the carrot. It won't go. Yeah. the candle 9 hour 34 minute was not a break of structure. 934 minutes. 34 minutes was not a break in structure. That depends on where you want to look at your break in structure, I suppose. Usually when you have a body candle breaking structure to the downside, ideally you want to see this bottom half break through with a body. It does break through with a body there, so you could say that it was a break in structure with a very deep retracement that did not take out those old highs, just came back into the rejection block, and now we're finally continuing on the downside. So you could say it would be a break in market structure, but you would have weathered a huge retracement back into here. Like if I was looking at this, I'd be saying like, okay, this mean threshold would be my line in the sand, you know, for bearishness. And the fact that it traded right through it, I go, okay, no, I'm bullish now. I would have been bullish right here at this point. That's your first level of pay yourself if you're bullish. And then if it rolls over and comes back down and you see this starting to occur here, we just took out this swing, right? This is a swing, higher candle, lower, lower. We took that out, inversion, break, body breaks below it. You trade back up into it right here to get short. I didn't see it. I'm just seeing it right now. And I'm not form fitting this. That is the reversal pattern that we look for. This is a swing here, this reversal pattern here to go back up into this range. You're looking for a body to close above this, come back, tap it, and then start going long. You don't take it on a wick. Because if this continues down now, you're going to be like, crap. He said when it closes above, it closes above, not wicks above. You got to get a body above that. I think we're going to run back up here for 10 o'clock. I'd like to see them take these highs out here and give me my 10-12. I was looking for 4-12, which is up in here. That was my objective for the day on the upside, and I'm so close to hitting it. So close. It'll tell you that I was last night, the price was down in here on the daily. And I was thinking to myself, if I could just trade up into that, because this was a bearish candle last night. And I thought, if you can trade back into the rejection block, this order block here, and I put a trade on and I had a really tight stop loss. It came down, took me out. Had I just left it alone and just let it run, it would have been a delicious run back up into here. So sometimes when I go to bed, I'm afraid that it's going to trade against me. So I put a tight stop loss, and sure enough, you lose. If you can't watch it and maintain it, you don't see all these reversals happening and stuff, you don't get an opportunity to either move your stop. When you're in profit, you can't move anything while you're sleeping. So you either have to do a fixed trailing stop loss, because you can't do your dynamic fail safe unless you guys can develop a bot. If you can develop a bot that will trail your stop loss as a fail safe, you let me know. Or if you know how to program that, you let me know, and you and I will talk. And it will manage your trade on the way up by a fail-safe stop loss. If you have those, if you can program those rules into a bot that manages your account when you go to sleep, your fail-safe is working for you all the time. Or if you can program this setup in here every single time, you break out a high, create a fair value gap. As soon as they trade below it, as soon as you trade back into it, you take shorts at these locations, stop loss goes up there, and that's it. That's your bot. It's a chicken dinner winner. I'll give you a free bot right there. If you can, if you're a programmer, and if you make it, give me a call. Let me know. I'll buy your bot. I expect a discount because I gave you the idea, and the failsafe was my idea. So I'd like to get a discount if you wouldn't mind. In 5. Oh, he was saying in 5 minutes. It's not a break in market structure. Again, I might argue that. NL. We have a body trading below here, so you could say that's a break in market structure, even though it's not a significant one. And that sudden snap back up, reprice, rebalance, boom. Then it comes back down again, and we have another wick getting below here. So you're right. I'm not happy with that, but technically, we have a body that closes below this swing point. So it could be considered a break in market structure. I like the way you're kind of analyzing it, though. NL, is it NL? Sorry if I'm not getting your name correctly, but I like the way your eyes working though, because you're going. That's not a crisp, clean break in market structure for me. It looks kind of like a stop run quick, and then a run back for another stop run or liquidity run. It's not really a break in market structure. Why? Because your eyes are getting attuned to something that you prefer to see. And if you like that, stick with that. It's like when I was looking up here going, I don't like the way that candle's bopping around there. I'm getting out. And it continued to, or in here, and it continued to go higher. Just because I didn't like the way the candle was acting, right? If you see something in market structure that does not support for you a break in market structure, when you see it cleanly, NL, that's what you're going to act on. That's what you're going to act on. So right here, we didn't get an opportunity to get in. Here's your breaker. It's not a breaker. Yes, it is a breaker. Last down close candle before a run above. No, I guess it's not because we have another one here. Mitigation. So either way, mitigation block, trade off of mitigation, go down. Remember, mitigation blocks are mid-level candles as far as I'm concerned. They're stronger than regular plain old order blocks. But when you make a run on a high and you don't get the high and it falls short, then you call that a mitigation block. You come back into it, trade short, keep your stop loss tight. See how we don't have a body breaking above here yet, and we don't have a body breaking above that little gap right there. So we're still short. I'm still looking for 10 o'clock to give us a run back up into here. Shake people off, scare the crap out of them. Run up here, people go, oh, we're going bullish. And then wait for a slam down. Maybe not. Maybe just going to open the floodgates and just go ripping right off of that spot that we were looking for. Just short of it here. And then start ripping down. God, can't wait for smooth days. This is tough. This is great, Chris. This is great, buddy. This is awesome. This is the time where you get to practice your skills. If this stuff's driving you nuts, it should, but it's an opportunity for you to practice in tight ranges, really close, act fast. What you're probably going to find, though, is when it starts to turn into salad days, you're going to be nibbling little pieces out of the market because you've trained yourself to look for these quick little 10 handle, and then you see it running 200 handles in a day, and you'd be like, why wasn't I in that? Well, because you're used to these high resistance days where you're trying to snipe as much as you can. Then you can relax a bit, and you'll start looking for longer ranges and longer ranges. That's why when you enter into this on a 1 minute candle, you use your higher time frames for your objectives. So if they're starting to get cleaner as a higher time frame objective, then bonus, go for it. Let it run, let it fly. Or you'll use your start getting really good at managing your fail-safe. You're getting really good at recognizing these short ranges. When they open up and become big ranges, you can manage them with your fail-safe or that little trick I just showed you on Bitcoin for the FIB tool. Hands order block. at 9:44. Order block at 9:44. 9:44. 9:44 order block. What about it? That's a down close candle at 9:44, Hans. 9:45, you mean? Probably. That's an order block. It is now a breaker. There's a swing point here. It's the last up close candle before a run below this low. It becomes a breaker. And you go breaker to, there's a swing point here. That's not a breaker. So breaker to mitigation, breaker over mitigation, breaker wins. Well, it doesn't win because it wasn't a breaker till it actually got below that low. But we're back inside this mitigation block here. No bodies trading above this yet. Keep your eyes on that area right there. If this ends up becoming a consolidation, a CAM model entry, and we end up popping above it, come back into it, CAM model 1 entry. You should not see a CAM model 2 in this. You should just see a CAM model 1, and then you continue back into the range, internal range liquidity. And like Hans was just saying, this candle becomes significant. Look for a retracement back into here. Start nibbling off some of your profits, and or manage for the back end with your FIB tool, whatever, or whatever other method you use. You got to know your PD arrays to manage PD array to PD array. And you've got to know, if you don't know your PD arrays really well, my recommendation to you, just a recommendation, I don't give out financial advice, is to use your FIB tool and yet manage your trade on a FIB tool basis until you get really good at recognizing what a breaker is, what a mitigation block is. You should dedicate your time to studying the PD array matrix. Get really good at recognizing them where they sit, because they will pay you dividends in a monstrous kind of way. So this is what we're looking for now. We want to see this start to grow out of here. Yeah, baby, you smell carrot. I see you smelling some carrot. So we have a displacement candle. We want to see this close as a nice little, don't run, don't get all sexy on this and say, oh, baby, I'm chasing you. Don't get chasey. Don't get chasey. Just wait. Look for this here now. Does this come back, give you a little bit of CAM model 1? $10 did not take out those highs. Interesting. So do we have a, I'm going to go with just 1 on this. Don't know why, but I'm going with 1. There's your CAM model 1 entry so far. Those of you who are CAM model players will have seen that. Look for your premium and discount arrays that are in line with discount inside this range, discount array, premium array, and there's that little guy sitting right in there. Let's put 1 in there. I'm going to put the stop loss down in here. And don't take these just because I'm taking them. Find your plan, trade your plan, and manage your trades accordingly. Don't go chasing after mine just because I had a couple of successful trades. Because if you pile in on this for the sake of copying it, you're not learning anything. You're just trying to grab some money. And if it fails, then you'll go, ah. And I'll say, told you, don't follow my trade. I could take a loss at any time. I'm just trading this reversal. That's all I'm trading. Stop loss should go down here. So I don't want to see it dig into that. No. That's why I've got my stop loss tight. If this snaps back now, the way you're supposed to do it is put your stop loss down here. And if that snaps back into that, that'll be the reason why my stop loss was tight. I didn't want to see it dig into that. I want to see it just tap this and start popping out of there. The fact that it's digging down into this even more is not so good, because I want to see this consolidation hold price at the high. 50% of that consolidation, a CAM2 model, you shouldn't see a CAM2. There's the CAM2 right there. So see how it stops right on it? Now it's starting to close below it. So I would have been underwater. I would have been like, I'm on the wrong side of this. Had I put my stop loss here, and I'd be waiting for this retracement back into my order to get me out at a less of a stop loss, a full take on my stop. But the fact that it was starting to eat right through this, and like it popped up, then came right back through it, it's like, no, that's not what I like. And have it trade your way, not go, well, I'll submit to whatever the algorithm's doing. No, I want you to do this, and if you don't do it, then I don't want you. I leave you. You're not acting the way I want you to act. See? And then all of a sudden we have this rip through. It would have taken out my stop loss anyway. But I have a logic behind why my stop loss was there. I have a trading plan. As soon as I put it there, I do not want this. This is how I want it to act. If it doesn't, I'm going to be willing to take $150 loss on that. But if you copied me on that trade and you didn't have any logic or reason, you just thought, I'm just going to grab some money. He's been doing well, so I'm going to jump in on that. You took a loss unnecessarily because you were just copying somebody instead of actually looking for logic that supported your trade plan. And that's not for me punishing you. I didn't deliberately do that to throw you off. I was thinking, well, that would be nice to trade that reversal. This would be great to be having it. A CAM model entry, and I don't want a CAM model 2. I want a CAM model 1 or this inversion. And I'm willing to go as far as that order block to do it. That's a breaker. And the fact that we ran through this breaker, see this last down close candle before run above that high, we actually ran through it and then popped up and ran through it hard. So now that breaker is no good. That tells me I'm looking for more of a continuation on the downside now. So what are we looking for here now? You're looking for a silver bullet entry at any minute. Now, where would a silver bullet entry be? There's possibly one right here. Small little one. You see that right there? I'll move this one to here. Nothing there. Oh, look at all the love. Thank you. Thank you, everybody. Thank you for the love. I feel the love, my friends. I feel the love. Fernando. Hoping 10 a.m. presents a good setup. Yeah, you and me both, brother. Where are we sitting at? 9. Oh, this is going to be it. I feel it. I feels it. Look, there's also that one up there. Now, Derek was talking yesterday about a 5-minute fair value gap. That's the higher order. I think that's what you were talking about, Derek. Is Michael doing a video right now? I haven't been checking. if Michael's over there doing a video, y'all should be following him. Only be listening to me. Patience and wait for the right setup. Yes, indeed, Fernando. Good morning, D. ES was a little cleaner. Got in at 15. Has a nice little run. Oh, good for you, man. Where are we at? 15. Would you get in at 15,270? Ooh, good man. Look at you go. 270. You're way up here. Oh, you're good for you, Abs. Well, way to go, man. Good for you. I'm happy for you. That's awesome. What an excellent run. Now I'm trying to think about how you got in there. So 270. Did you trade back inside this inversion? And you went short on the inversion. Interesting. So you took the breaker. Okay, so you came off the breaker. Is that it? This up close candle did a little run down. You come back up inside it. You take the breaker. As soon as it reacts off of that, comes back into it one more time. You treat that like it's your entry. Is that what you did, Abs? I'm trying to think about how you your logic. That I love the logic some people come up with for entries. And I'm always looking for an opportunity to steal an idea. Yeah, I'd be interested to know how you manage that one, Abs. Running for midnight open. Running for midnight open. Midnight open. Oh, right here. Where are we going for? We may not. Oh. Wait for it. This is the Sunday's opening candle right here. And it's right around near our silver bullet. Be a great opportunity to snatch it and take off and blow right through Sunday's candle and start running back down again. I want to put my stop loss. Ooh, you're going to have to put it up here. There's this imbalance here too. I don't want to see the mean threshold of that candle get taken though. Let us wait and see. Let us wait and see. What time are we sitting at? Oh, yes. Delicious time. Delicious time, my friends. Look at this guy right here. Imbalance. Michael loves taking these things. Bam. Now go back down. Let's get the motivation. Come for the carrot, my friend. Come for the carrot. Waiting for early, yep, went over 2021 yesterday. I'm at 800 so far today, just grabbing 100. So a pop. That's the way you make money, Chris. That's the way you make money, man. Good for you. Fail safe. Don't chase waterfalls. Don't go chasing waterfalls. Yeah, the failsafe has already said, hey, look, man, you blew through this already. If your failsafe is kicked in, you should not be in this trade. It depends on how you run your failsafe, I suppose. Out. Busted. That was not the silver bullet entry for 10.13. Ran liquidity. Go on now, run down, you bugger. See your failsafe, as soon as that closed above your inversion right there, you got to say, ugh, I've got to take my losses. As soon as that opens up, starts to trade up, you should be out of your trade. Oh, you take a full hit like that, and then we could be running higher yet. Derek's like, don't chase the waterfall, man. I guess you could look at this as wait for this to close and then decide whether or not the next candle down, if it comes back up and taps it, then you can get short. Instead of trying to pick that spot. It's almost like trying to pick a high that didn't work out for you. Look at these equal highs up here. So looking for this breaker here. So you want to see it break below this candle here. Thanks for your streams. Love it. Luke's, you're welcome. We're just taking some hits, but you're welcome. We just hit consequent encroachment on the 1 hour fair value gap, unicorn short on the 5 minutes. I don't see a unicorn in there. Yeah, I don't see a unicorn in that yet. And you really a unicorn setup. If you go to Michael's definition of a unicorn setup, it's really a personal thing. Not the unicorn setups and always the perfect ideal. You'll see that they can be quite personal in terms of how you approach them. Hey man, just checking in to see how things are going. Well, Stoic Jack, we had a beautiful start to the day. We're not quite sure how things are gassing up now. We've taken a couple of losses, but we will just going to kind of wait and see what we get for a setup here. Now, that first failure of the silver bullet didn't quite work. We're looking for a continuation on the downside here. Didn't get it, ran all the way back up, took liquidity out, and now we're back into this order block breaker to mitigation. So from there to there, that's where we're stuck. So we came all the way down, tapped it, then came all the way up, tapped it. So now we're between these two. It's got to make up its mind where it wants to go. So they can push for higher prices, continue pushing back into this range, higher into that range. So we're kind of stuck in here right now. We'll have to wait for it to make up its mind what it wants to do. So we have still other parts of this to go. So we've got this one here. Order blocks body. And then we have this order blocks body. So if it runs up, taps that, comes all the way back down, taps this, goes to midpoint, break, meet rejection block to rejection block. There's a whole bunch of arrays left in there still. They have to extend to. So if they start to blow through, this one's the stronger one because it's the breaker. This one's the weaker one. So we expect this one to give way. So we're right through into the mini threshold of it. So if we pop off of that now and start to wick back down, you want to see it run below these lows because really you're on this candle. See how we've gone from here to here, and then now we've created another order block here. We've run above it. If we come back, there's a little imbalance there, so run back into this imbalance. And now you're looking at this see how we've had a body slightly close above here, trace back into it. You want to see that get blown right through. Now it's the weaker one of the two, so rejection block's been hit. Now if you want to stay inside this range, it'll come back down to here, this imbalance here, or it will start really pushing higher and using this as the next price leg up from here to here, double that, and then have an idea where you want to see it go. Oops. So rejection block, you don't get your high again. Come back into that imbalance we talked about right there. So snap on it. Now, are we going to push through that and go back into a discount array? Because when you look at this from a quarters perspective, you look at it premium and discount arrays. This is the premium of the premium array. Now we're into the discount of the premium array, and we just dropped into the discount of the premium in that whole range. We just popped below it into that inversion, sorry, into that little price imbalance. Now we're working on the rejection block to rejection block. Now start pushing higher. Or you can it'll just come back up into mean threshold of this candle here, which is right there. And now we start pushing back down to a discount array again, down into this lower range, which is this breaker here. As soon as that breaks that low, we have a breaker. So it's breaker to breaker. Now you're inside this range. So now you've dealt with the upper part of that range, which is the premium. There you go, all the way down into the discount. So if you start to look at these things and start to look at the ranges that you're in, when you start getting into the bigger stuff, when it starts stretching out and you start to see the bigger stuff, you'll start to go, okay, I'm expecting it to run back into here now. I'm checking the ranges out, and you'll see that they're a lot more, price action starts to get a lot more clear. So if we start to eat through the mean threshold of this candle here, that's the breaker, last down close candle before a run above a high. If we lose this one, it's a senior array, right? So that gives me more weakness on the downside. And it did. So rejection block, continue pushing through. I'm not seeing anything in the mentorship. Yeah, took out the high breaker, but then fairly got 3 in 1. Good for you, Abs. Good for you, man. Dave Barry, good morning. There's a 3-minute fair value gap on the 3 indices. Where would it be? It would be bullish, be a bullish move. Well, that's not working out. That's not working out at all. Oh, look at that. See how the body traded below this swing point right here? I didn't see it till now. Shit. Right there. See the body just closed below it and then popped up, tapped it, and now it's just like slammo. So that price leg is not a continuation. That reversal right there happens right there, and then popped into it, tapped it, and went. I don't know if you guys caught that. I just saw it now. But there you go. There's your run. So the silver bullet, had you been able to endure, mind you, Michael, so the rule is put the stop above the high, so you would have been taken out anyway. And if you would have gone long at this point, you would have hit rejection block only. And then that's why you pay yourself at rejection blocks and move your stop loss up tight behind you. Because if it turns against you, as it does right here, you're getting hammered. So look for the breaker, an opportunity to get in on the breaker. You can't even get in on that. Oh well, and off she runs. Now, journal what you're thinking here about this whole trade. Are you beating yourself up? Are you saying I should have done this? No. If you followed the rule of that was the silver bullet, and you put your stop loss above the recent high, like Michael says, then oh, I gotta take this. I'll be right back. Sorry about that. That was, remember when I was telling you I was doing that sleep study and they were going to check me for sleep apnea? Yeah. Apparently my wife was right. Who would have thought your wife would be right? Hmm. Who would have thought that? So yes, apparently I have sleep apnea. So just one more thing to throw on the pile. Very important if you do have sleep apnea, people, to get that checked. They can really increase heart interthoracic pressure when you're constantly working. That puts over years, it puts a lot of strain on your blood vessels, strain on your heart, create heart disease. It can increase the risk of atherosclerosis. If you can get a decent night's sleep, get your sleep apnea test done, man. I tell you, if you have it, get a machine, get the snorkel, get the whole. I get. Apparently, I have to spend like $3,000 on a damn machine now, but you'll save yourself a whole world of hurt later on in life if you take care of it early. And I'm a young, spry 58 years old, so what the heck? Might as well get started now, right? I want to make it to 80 or so. I looked at that NMN and the nicotinamide adenine dinucleotide, the NAD supplements you can take. They're like a molecule you can take to help regenerate your DNA. Some really cool research done on that right now. Anyway, I looked that up yesterday, so I'm going to be ordering some of that in. You're going to see you're going to see a kid in diapers. Eventually, they'll reverse my aging, and you'll just see this little kid with diapers trading right here in front of you. I'll be reversing my age. This 20-year-old, you go, wait, has he got his kid working now? NQ is YD didn't 22 model smooth RHM. I forgot to tell you that I got funded last week. Stoic Jack is funded. Oh baby, you get the text message right here. Congrats, Stoic Jack. Woohoo! Yeah, baby. Way to go, Stoic Jack, man. I'm looking right at you, buddy. Good work. Well done. Woohoo! Stoic Jack. Yes. Well done, buddy. Congratulations on your new funded account. Well done. Well done. Good to hear, my friend. Good to hear. We're sending you love, my friend. 100%, 100%. Woohoo! Party! Stoic Jack! Like, yes, NQ still needs to take out Friday's highs. We'll see. Price action just showed why 10 handles again. It's the standard on NQ. Yes, well done, Derek. There's your midnight open. You'd be hard pressed to convince me that we're going to run back up here and take that out. It still feels heavy now. Like we're just going to, this was just a pop back up into the mean threshold, a consequent encroachment of this one. And now we got the continuation down. God, I was just so dang close to that too, picking that spot. Anyway. Looking for further downside prices. Oh my goodness. I was live on this sucker too. I was live on it right up in here. And then when it started going back up, I was like, I got out. And literally 3 minutes later, it just hammered down Oh, that would have been a beautiful little run on my, oh well. Price additional 10 hours, there's your midnight. I definitely could have gotten on both ways. 10 a.m. first up, then 10 hands. Russell blowing through 1 hour consolidation lows. Fair value gap. Silver bullet 20 at 18. Yeah. Well, you can't say I agree with you, Chris. You know, the 18 silver bullet. But you'd have to say, okay, well, there's the 1002 silver bullet for a long, and you got taken out. Then you say, okay, here's a 1005 silver bullet. You got taken out going short. Then you have a 1013 silver bullet, and you got taken out. Then you have a 1018 silver bullet. Which one are you just going to keep repeating, taking? You'll only take, most people only take one or two of those and they'll go, I'm not taking any more of these. And then it was the fourth one that finally tore off and made you money. If you take everything that you think is a silver bullet in there, then you're looking for, that's why I hate silver bullets inside consolidations. You just get your ass handed to you over and over and over again. So wait for, you know, a swing point to get taken out, the setup, swing setup to happen. And there would have been your ideal entry right there at 18,347. It would have been just enough to get you in if you were quick enough to see it. And it would be literally a down, 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 come back up, stop, open, and then start running on it. So if you didn't get your trade in there right away, you were, but then you wait for then you say, okay, well, I'm going to wait for the breaker. And your breaker's sitting right here. And you don't even get that. Literally trades below it and doesn't even come back to it and tap it. It hits this guy right here. It's the lowest body down close candle. But, you know, you could call it the parent breaker of that whole run up. Because, you know, you're looking at these little swing points. Say, yeah, that's what validates it. But that would have been your one opportunity right there. It closed right on it, opened on it, and then left. So last ditch effort. You got to be super quick to catch those. Who the hell is this now? Hello? Hello? I hate those scam calls. Congrats, so Jack. Yeah, and foreign currencies are feeling the same downward pressure. Currently Dixie moving up as well. Symmetry is seen. Oh, Dixie's on the way up. Ooh, okay. Well, look for this then, right there. If this just turns into a wick right now, we come up to this particular point here, right there. Are we getting a reaction off of that? If we get if we close above that candle, this spot right here on the next 15-minute candle, or we got 4 more minutes left of that. If that starts to pull back off of that and closes below it, stop loss would be here. Not that you're actually going to trade this, but then you look for similar. Yeah, so we've already traded above this. If this comes back to here now, you've got one to go long, and you've got this one here to go short. So, but this didn't take out any previous highs, so I don't give this a lot of strength. But if you're just coming back to find some, I want to see that close below that. It didn't take out a swing point though. So I'm suspicious of this one. I'm more supportive of a run higher. You've already come back to the body of that of that candle there. Could roll over and go back down again. Come back into this consolidation cam model entry. You've got this fair value gap to finish filling right here. That'll be a cam model 2 entry right off the open. So if this comes all the way back into the midnight open candle, look for a further, see it, what kind of reaction you get off of that. So all these swing point, taking out a high. If this closes below here on the hourly, comes back up inside this, look for further downside back into this consolidation or cam model here. Now, if it trades through this, comes back up into it, treat this candle as support to go lower. So we didn't get the upside price we were looking for. That ended up right there. If you lose the mean threshold of that candle, which is right here, you're no longer bullish. This inversion, you've already traded through it. If you come back into this now and get short, that will be your swing point right there. And we're still going to come down to here now. It would have caught a nice run there. Oh, the day's coming when we catch a nice monster run like that. Look at these delicious runs. St. J 33. Let's go. 1851. If you're in that St. J, good for you, buddy. Love it. I was looking at a sweep of liquidity first, thinking that short-term liquidity was swept 1017, the fair value gap being formed right now. Yeah, that's a good logic, Chris. I hear you, G. That's why I think Michael suggested we start looking for them on a 5-minute time frame, then drop minute by minute until you see one of the closest time frames to a 5-minute fair value gap. Yeah, you were mentioning that yesterday. I don't remember him talking about that. So when you get a chance to review that again for me, I'm going to have to try and look that up, Derek. I don't remember him talking about go from a 5-minute work your way down. So I'm going to have to review that because that's a valuable piece of information for the stop losses or for the silver bullets, when to enter into them. Because I remember you mentioned that yesterday. I thought, I don't remember him talking about 5 to 4 or 5, 3, 2, 1. I thought he said the best ones occurred on the 1 minute to 15 second. That's all I remember him saying. So I must have missed that video. So thank you for pointing that out. I will definitely look that up. Tap new week opening gap, 4-hour fair value gap coming. Yeah, that has made a big difference for me since Michael's video. Enter on 1 minute once cleared monitor on a 5-minute and keep going to higher time frames. Still monitoring 5:20, 70, enter on a 5-minute. Let me see where I got that. I'm going to cheer on abs here. Good work. Holy crap, abs. Look at this. Holy abs. What's going on, man? You're catching a runner. You're going to pay for your trip to New York in like one day. Look at this thing. Man, you're in a bomb. You're up 60 handles already in ES, and that's huge. You're going to have a 100 handle day, my friend. Look for those lows. Look for that rejection block. Oh, man, good for you, abs. Yeah, I'm looking for this. I'm looking for that run all the way down here because this thing doesn't count. That down close candle doesn't count. We haven't even validated it, so it doesn't exist. This is the sucker you're looking for. So if you lose the mean threshold of that candle, which is what you're hitting right now, see how it reacts off of that? Well, it's got a fraction more to go. See what kind of reaction you get off that? But I'd like to see that just keep pushing through that and get into these lows. Oh, look at my live trade, and I got out way too soon. Oh, just follow my rules. I just traded my. I just looked at it and went, nah, whatever. Don't beat yourself up. Just let it go. I'd be in that one with you, abs. I would have been in some killer trade right there. Man, I'd be over 200 handles. 200 handles right now. Yeah. That'd be a 200 handle day. Five-minute fair value gap down is a 2022 model. I think he said the opposite, enter on a 1 minute, then go up on time frames. I never went to New York. It was Spain. Oh, you went to Spain. Oh, I'm going to New York. I'm going to New York. I'm going to New York next week. You went to Spain. That's right. How was Spain? How was Spain? I want to go to Barcelona. I think it's just, they got some amazing architecture there. How was Spain? Did you have a great time there? I'm sure you did. I was thinking it's because I was thinking about New York. You didn't go to New York. You went to Spain. Good for you. Yeah, I just remember Michael mentioning something about this 1 minute fair value gap. You know, the silver bullets occur on the 15-second all the way up to the 1 minute. So I totally missed a video. If he says start from 5, work your way down to 1. So is he totally getting rid of the 15-second one now? I don't know. Now I'm confused. See how we're right near this mean threshold of this candle? How we're getting this bouncing around in here? It's an area sensitivity. You ignore this candle, area sensitivity. So you want to see that give way. I'm still going for here, but that is your line in the sand if you're bullish. But we've got this inversion here. I saw a guy on Skype or on X last night talking about, is this a high probability inversion fair value gap? Why is it not a high probability? And I couldn't understand why he was thinking that wasn't high probability. Just probably because of the consolidation, how messy all this stuff is in here. Inside a market like this, it's super high consolidation and chop. So that's what makes it higher. Low probability, but still a probability nonetheless. Here we go. Here we go. Start running through it now. Start pushing. Here we go. Come on, you got to get through it now. Don't just tap it. Drive through it. That's where we're looking. Um, you know how he gave us stuff that most of us could do. Most people don't have access to 15-second charts. Probably exists on all of them, right? Space is fractal. This is just a higher time frame. The more reliable it is, the more recent number 1 minute scattered models that came back and take out the low. That's why he prefers 5-minute higher time frame out before it be along. The link I posted talks about some of what exactly as you presented with jumping the time frames until you, Chris Ali. Chris, did you post that in the Telegram channel? If you did, great. Thanks very much for that. I'll be looking that up tonight for sure. Index is a beautiful thing. Yeah, that was gonna be my reference point for sure. That's okay. You don't have to. I'll look it up on the index. But if you have it available, then by all means, drop one in there. I appreciate that. Because that will seriously change how I look for those silver bullet entries. Thanks for that. Man, they're just hammering right on that. Let me just pull that one up here. It's order block the whole price now. Funny when he walks you through it, it seems so simple until you stare at the charts live and flake out. Hey Chris, can you drop a link here as well? This is absolutely the best place in the world, trading world. I love being here and listening to you guys. I learn very much. That's good. I did above. There it is again. For some reason it's not posting, Chris. I don't see it posted on here. We had a small fair value gap, 18 in 1 minute. That was a nice silver bullet entry. Chris, I don't see it. Do you see the YouTube link? I posted 3 messages above you. Nope, there is no link there. You have to go to Telegram, their commandments, if you want to see it posted, or use the ICT index. Find it. I'll just go here. I'll post it here. I think I'm the only one that can post in here for links. Copy link. Let me just go to this. There you go. That's courtesy of Chris. I'm just checking your report pin, go to channel. No, I can't even give you access to do that, Chris. Sorry. I can add you as a moderator. That's about it. Yeah, sorry about that, Chris. I don't know why it's not you're restricted. It seems like everybody's restricted. Jose, well, I don't understand anything you wrote there, Jose, unless you're directing that to somebody else. Don't give me power. Get taken. Should I get taken again? Get back all my profits today. It'd be a slow, insidious grind all the way back up into 45% of that range. 62%, I should say. Yeah, look for I forgot this again. This 10 o'clock, 11 o'clock, the retracement back into the range, 50 to 62% of that range. Imagine that hopped above the recent high. Yeah, this is the typical retracement from 11 o'clock back into the range that was created between the New York Open and 11 o'clock. Usually you get a 50 to 62% retracement back into that range. And then either a continuation or a run back up to those old highs. So we'll see how it acts off of 50%. And we have a fair value gap sitting in here again. So just popping up above the 50% here will fill that fair value gap, which is just enough to get a discount, a premium array to run back down into a discount. I really have to start. Oh, I didn't have any of my alarms. That's why. I turned off all my alarms while I was away. Fair value gap at 1036. Reaction off this order block here now. Now you want to see this kind of just lift up higher now from here. I don't want to see it drift all the way back down into here again. Oh, how do you like your paint? We're between this candle here and this one here right now. This one's not valid yet. Push up into that 50% again. And then you're looking for the 62 if this, see how the 50% acts here. This might be from the actual, from the 930 open, so that would put us 50% would be up here. So this is like the 11 o'clock silver bullet. Was 3 short of that main threshold. 3 handles, 160, 157 was the 50%. Well, everything suddenly went quiet, hey? That mean threshold is held price on the daily, and that consequent encroachment of that city is held price. So we're between there and there. But the day's not over yet. We may still get a little rundown in here. If we continue to go higher, we're looking for, if we get through 62%, then we're looking for a run back up to 70%. Is this consolidation here? Now that we've traded above, we've got a look at swing going on here. Let's have a look at the 5-minute here. I want to see this order block hold price here on the 5-minute, at least the mean threshold. If I lose the low, then obviously I'm on the wrong side. I'm looking for this. It's the only spot I can see an inversion other than reprice rebalance. We didn't get an opportunity to get in there. But if we end up closing, if I just wick down in here, grab this, I want to see this get above here. Otherwise, this becomes the next swing down. And we don't get the 50% we're looking for unless it's right here. Nope. Look at that. Gave me a kiss and left. It's been doing that a lot lately. Sometimes you can be too precise. Oh, it did take me in. Wow. Okay. That's odd. I was a bit delayed. That was weird. They must have gone, oh yeah, you got to give it to him. You got to take him to the prom this time. No, I don't want to see it come back down here. Damn it. Build a buffer here or something. Oh yeah, we traded below it there. See that? Traded below. I'm gonna keep trading these little principles here. Even though we're not at 50%, we got a swing. I'm gonna take the swing. Didn't see that get above here now. Order box not valid yet. This one is mean threshold. As soon as I clear out that low, then we should not leave, go below or above here again. I'm about to protect my oh, got grumbly tumbly. Take it out at that order block, which is a breaker. I'm just trying to nibble back some profits I lost on that last trade. I'll take them 10 at a time. So we've got this as a valid order block now. You want to see the mean threshold of this one giveaway? We're already between here and here right now. So we've got the body respected. You want to start seeing this giveaway. Or we could just have this as a breaker because it's a stronger senior candle. This gives way and we end up running back up higher. See that blast right here now. So I want to see this drive through here, come back, get this, and I can get short on that for that breaker. This is that example I was giving you earlier about we have the reversal here. When the body closed below it right there, we got short to the breaker. You can get short again from there. We want to see that breaker give way now. If we get a nice body through this, come back and tap it, I'll get short there again. You don't want to see these little tiny candles. You want to see a big displacement to the downside. Pop back in, grab that. And your stop loss will go like your trailing stop or whatever it is will go here. So if you lose that, your fail safe would be inside that candle. If it trades above it on a close, comes back, taps it, you get out before your stop loss is taken. Hopefully, that it doesn't just shoot right through you. That's how you'd have to position a stop loss there, or that fail safe. So I want to see it close below this. Give me 3 or 4 seconds, close below. Nope. Literally sits on it still. There you go. You don't want to see that to be a liquidity, or you want to see that she'll close on there. Oof, how do you like your paint to dry? See what's happening over, meanwhile, over in Bitcoin. Looky. Swing. When you get a candle that trades through 1, 2, take the second one. Pops back into it here. And you've been on it like a freaking ride for the day. Holy smokes. That was a massive rundown. It would be absolutely destroying Bitcoin right now. There's your reversal. Here's a reversal. Come back up, you tap it, take out the highs. Then you get the reversal. Body trades below it here, trades back into it here, go short all the way down, take out the lows. Here's the reversal. Body trades above it right here. You got to wait all the way around to here to get long, and you're really trading back to this one here. So you'll be going long there to this one here, because they're literally overlapping each other, and you'd be out right there. So there's like multiple opportunities to get in there while we're still pissing around inside all this mess here. See, it's much, that's the kind of price action you want to see happening in NASDAQ. Nice and clean. Look at that entry right there. Holy smokes. Didn't see that at 9:30 this morning. Shoot balls. I think we're going to have to play over there for a while. This is just sloppy price action. Well, you want a body to close below that. See how it was just a wick. So we're back up inside this again for, ideally, I'd like to see that come right up into here. See how we're talking about buffers, right? So you got this reversal happening right here. The body trade's below it, so you get in short here to breaker. Comes back up, short here to breaker. Or wherever you want to go, but that's your next PD array. And then all of a sudden it pops through, runs all the way back up. You get short again to the breaker. So there's multiple times. This is the buffer you're building for in case it takes a run on your stop. Then you've kind of padded up your entry here. So if you do take a loss, it'll be quite minimal because you've already been trading to the breaker multiple times. You'll see these happening in these little consolidations with this thing happening. You can just keep going. That's your premium array, discount array. Back to the premium, back to the discount, back to the premium, back to the discount. Now you have to decide for yourself whether or not that's even something you want to venture into. You've had like multiple attempts. If you just keep playing that little range right there, you've had from here, you enter in one, body trades below it here. You have one, comes back into it, 2, 3, 4. This will be 4 times you get to come back into that breaker. And you're about to hit it again. Again, those are really small. So if you look at it, 38 to 20, that's 10 handles. Those are 10 handles at a time. Now you've cleared out this high. Stop run. Order block, fair value gap, return to order block. Rejection block, there's your 50%. There's 50% of that range. 50% of that one. The only one left is this one here. And then further upside again. Hello, Lobo. How's it going? Thank you, sir. Thank you. Good to be back. Got that regular trading hours gap just above you there on the 5-minute. See. This looks just running for liquidity here. Got a fair value gap, broke above it, come back inside it, find some support right at that bottom. Perfect. Run back up. You're inside that range. Aim for that rejection or that little order block right there. Equal highs. And back to this reversal over here. Your 11:30 macro. It's beginning now, so it should take out that high. And what do we got going on here? 50%. See how that macro begins. Bitcoin's finally taking out that high. Back into the area we're talking about. So this little reversal here. You'd be basically trading from this one to this one. So the body's hit inside it already. He's kicked in. I'll be right back. Just gonna head to the bathroom. I'll be right back. Keep your eye on that 50%. We've come back up and filled this fair value gap here. And that macro started at 1150. So either we're gonna really start booking it back down here now, or just one little pop up into the 50%. Or is that just a fill of this fair value gap here? The bodies seem to be respecting it. And then continuation. You can argue both sides of this right now, so you're not in it. We're going on here. Are you guys still in this, abs? Are you still holding further below? Or did you take out the mean threshold of the well, you're in here, aren't you? So you'd have to say that mean threshold is where these guys ended up. I wouldn't have had a call for you on that one. I guess you could take these two candles or just the high of that candle. I don't know. I'm trying to form fit it here as to where that lined up on the downside. Look at that reversal right there. Swing keeps taking out these swings. We still haven't broken to the upside yet through here. Right here, you traded above it. You would have been taken out right there. You would have looked at that as a swing. You would have, that's your entry. You come down and all of a sudden, oops, I'm in the wrong side. So if you would trade long from there, here's an example of how your fail-safe would work for you. If you traded right off of the bottom of that inversion right there, it came back, took you in, and you were like, okay, now I want to go long. And all of a sudden it closed here. Your stop loss is sitting here, and you go, oops. My fail safe has to kick in here before my stop loss gets taken. It opens up, comes all the way back in, gives you one opportunity to get out before taking you out. And then you move to the sidelines and wait. That's a perfect example of how the fail safe would save you in a situation where you're on the wrong side. Then you go, okay, I got to wait for a new setup now. Let's say the same thing happens on this side. You see this swing, and let's say you wanted to go low on that one. Not that you would, because there's no, it did not take out an old high. But let's say you forgot that and you had a fail safe. So here's the reversal of the fail safe on the other side. So you entered in long right here. And it broke through. So you're going long right there. And if you're wrong and it's going to trade against you, you go, oh, it's closed above me again. The moment it opens, comes back, gives you one opportunity to get out before it takes out your stop loss. Again, fail-safe works perfect when you just give it an opportunity to, you always enter it on the very bottom or the very top of where you want to go. So if I want to go short, you enter it on the very bottom of it as your perfect entry. Because if you're right, you just caught a tiger by the tail. If you're wrong, you get one opportunity to get out. If you're wrong, you get out. If you want to take the long now, right there, if you're or short, I should say, then you're wrong. You can get out before it takes you out. Here's your swing point. If you see, if that's your swing right there and you wanted to get long, here's that perfect entry. The perfect entry is right on the bottom of that inversion. Again, it looks right there. That's your inversion. So you swung below the low. So you take that one this time. It trades through. You go, great. Now there's a body. If it returns back into here or here, ideally it'd be perfect if it tapped there, and it does. It taps you in for the perfect run. Okay. Literally the perfect run right off of that one. So if you were wrong and wrong again and then got right, you'd be like bang on, killing it right now, all the way back up. So you'd have perfect entry at 12.12. You're looking at 12.35 right now. So you're up 13 or 23 handles in S&P. But again, you have to have the wherewithal to be able to see these inversions and then put your stop or your entry at that exact spot. If you're absolutely sure, that's where you say, look, I want a discount. So if I'm wrong, I want one opportunity to get out. If I'm wrong, if I'm going to go short on this, or if I'm going to go, yeah, if I'm going to go short, you take the, no, this would be long. So if you're going to go long and it closes you out, then you want to be on the very bottom end of that. So if you want to go long and it comes back against you, trades back, you go, no, I'm wrong. Now, if this is going to go long, you say, okay, well, if that goes long, I'm going to go right here. Trades above, comes back in, perfect entry. You're going for your short here, you get out, long here, you go in, and you're in for the ride. See there, I wanted to go short, trades above me. This one here would have taken me out anyway. I was going to say, if it gives you an opportunity to get out right there, now go short. So this is one of those rinse and repeats again. You'd have to put it in up here. If you're wrong, it comes back, it takes you out. You get to break even. And we're back into the cheese grater and lunch hour. Now I got out at 15,220. 15,220. CC market structure break to the upside. Creates a bunch of fair value gaps. Breaks market structure again to the upside. Comes back down. On top of it, finds some support. You bail out of your trade. Good. You're right near the bottom anyway. That's a good call there, Abs. Well done. Well done, sir. I was trying to find a video when Michael said to enter 1 minute, then after it clears, go to the 5 minute. You are live and agreed to what he said. It was even a question someone had. We all said question. Answered. Right. Yeah, I remember mentioning taking out an entry on a 1 minute and then managing it from the 5 minute up. But I don't remember, I've obviously missed a few of Michael's videos. Obviously missed a few. That one there puts us at 50 on the mark. We might just go into a little consolidation now for CPI tomorrow. CPI could run out these highs here that Abs was looking for. Like they look like prime real estate right now. Run up 50% of this wick and then slam right back down again. Hello? Good, how are you? Yep. Yeah. Yep. Finally getting our kitchen counter done. It's been for a month already. They're coming to do the countertops. Finally. Well, with that said, I guess Abs, maybe you could find it and on the ICT index site. Yeah, there's some research we need to do on that FIB tool for sure, or that silver bullet. With that, well, it's been kind of choppy chop, so I am done for the day. I hope you guys had some fun. I hope you got a chance to learn a little something about high resistance markets and how rough they can be. I'm looking forward to after CPI or CBI tomorrow, we might get some a decent rundown. I'm still looking at these equal lows. They're not leaving this untouched. There's way too much liquidity down here with this fair value gap. I can just see CPI really screaming this up into this wick and then just slamming it right down into here. I was more hopeful than anything else. I'm kind of a here we're into a seasonal tendency where this market tends to make a low in mid-April. So we could be waiting all the way inside here for a final jaunt down into that range. So we'll see how that goes, but %. If I pull that right from the very top of that one there, 50%'s here. Anyway, keep your eyes on the 50%, 62% retracement, and then see if we get a reaction off of that and then move back. I can see this just going sideways inside this range here till tomorrow. I don't know. We may even break out and do a pre-run on these highs before tomorrow, and then CPI may push the numbers back down. So we'll keep an eye on that. Yeah, we'll keep an eye on that, and I'll see you guys tomorrow bright and early. Hopefully they won't be doing any banging around in the kitchen for a while. Kitchen's not too far off my office here, so let's and then the flooring people coming in. This could be like chaos in here for a while. Okay, well, that's it for me, you guys. Thanks very much for tuning in. Again, be kind to each other out there, help each other out. And I love you guys. Thanks for tuning in. I got 51 people still hanging in here. Thank you. Thank you. In these kind of high choppy environments, it's even hard for me to kind of read this candle by candle because we're into like such tight consolidation. It's so crappy to be in it right now. So yeah. Yeah, it's hard to read right now. So stay out of it. Wait till you have a clean setup, and wait for CPI tomorrow. I think give yourself a chance to just sit there and go find something to do. Go remodel your kitchen or something. Anyway, I wish you guys all the best. I will talk to you again tomorrow. Thanks for tuning in, and see you tomorrow.